Fancy seeing you here in the park. I am from InvestTeens.
Please state your purpose.
I am an educator visiting with you today to discuss company risk, which is also known as business failure risk. Do you ever notice that in our free enterprise system, there is substantial competition?
You mean, like Coke versus Pepsi?
Yes.
FedEx versus UPS?
Yes.
Verizon versus AT&T?
Yes.
McDonald's versus Wendy's versus Burger King?
Yes.
Staples versus Office Depot versus Office Max?
Yes. I think you get the idea.
Apple versus Google versus Microsoft versus RIM?
Correct.
What's your point?
As consumers, we love how companies leapfrog one another with the next great innovation. We buy the best products available from whichever company offers them.
What's your point?
If we put our investing hat on and think about which of these corporations could earn us money, our job becomes much more difficult.
What's your point?
Competition is intense. What separates the eventual winners from the losers is not that much. If the corporations we choose to invest in do not emerge as winners, we could lose a lot of the money we invested.
I don't want to lose my money.
With competition being truly global, and the internet connecting us around the clock, the stakes have never been higher.
I really don't want to lose my money.
Sometimes all it takes is a downturn in the economy to reveal which corporations are the weaker ones. And as happens daily on the plains of Africa, they get picked off and take their last breath.
I said I really don't want to lose my money.
Sometimes the executives make bad decisions, pursuing the wrong products or markets at the wrong time. When a corporation fails and declares bankruptcy, its shareholders usually get nothing.
Now I know why they also call it business failure risk.
The chief executive may want to blame the failure on the economy or other external factors.
But that's a poor excuse, because its competitors survived.
Right you are.
I have an idea. As long as there's a risk with any company I choose, I will invest in the biggest ones. Surely this must count for something on the African plain.
You might be onto something.
I'll make investments only in our biggest bank, our biggest insurance company and our biggest car maker.
Yes, well, that's been done by millions of investors.
How did this work out?
The stock of our biggest bank, Citicorp, lost 90% of its value. AIG, our biggest insurer, had to be taken over by the federal government to keep it from going under, and General Motors declared bankruptcy.
So much for that idea. How can I avoid company risk? I don't want to lose my money.
There are many ways to reduce it. First, never invest too much of your money in any one corporation. Your mother told you never to put all your eggs in one basket.
Wise woman, my mom.
You can easily spread your money out by investing in a mutual fund, because it will own the shares of 50, 100, or even more corporations.
Note to self, learn about mutual funds.
Think about this as well. If there are a few leading corporations in an area of the economy that you like, you could buy stock in all of them. Who says you have to throw down on only one?
I am going to ride all the horses.
Speaking of areas or sectors of the economy, there are special investments called exchange-traded funds, or simply ETFs, which buy and own the leading corporations in a sector. Buying a single ETF spreads the money you wanted to invest in the sector across the leading corporations.
Note to self, learn about ETFs.
I think you've learned something today, but I would like to ask you a few questions to make sure. Ronald Reagan said, "Trust but verify."
I'm ready.
Question 1. What is another name for company risk? Question 2. What are 2 reasons why competition is more intense than ever? Question 3. What can come along to reveal which corporations in an area of the economy are the weakest? Question 4. Even without this happening, identify decisions by corporations' executives that can lead to its demise. Question 5. Identify 3 ways that an investor can reduce company risk.
This concludes our InvestTeens presentation.
Thank you for watching.